Right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. I trust you've all had a great weekend, spending some quality time with your family and friends. Now let's get back to a brand new week of trading. Right, please take note of the disclaimer. Right, so take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right. My name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, hi Costas, good to see you as well. Right, thanks for tuning in. All right, as usual, before we dive into the charts and trading view, let's take a quick look at what's on the economic calendar for this week. Right, there's quite a few things going on. I just want to bring your attention to the inflation data that's out of the UK on the 16th of October. That's on Wednesday. We also have the ECB releasing its monetary policy statement, followed by President Christine Lagarde's press conference. That's on Thursday, 17th of October. And after that, we've also got US retail sales on the same date. But of course, when you look at the calendar for the entire week, there's quite a lot of other things going on as well, right? I just highlighted three of perhaps the more volatile events. But we've also got FOMC Governor Christopher Waller speaking later this evening. That's at 7 p.m. GMT time. We've also got UK Labour claim and count change and the unemployment rate that's out at 6 a.m. tomorrow, Tuesday, 15th of October. We've got the ZEW economic sentiment index for Germany and the euro area. We've got inflation data out of Canada, inflation data out of New Zealand and the UK. We've also got employment data out of Australia, and of course the ECB's monetary policy statement that's out at 12:15 p.m. GMT on Thursday, 17th of October, followed by President Christine Lagarde's press conference at 12:45 p.m. And in between, sandwich in between, we've also got US retail sales out at 12:30 p.m. GMT. And on Friday, we have GDP data out of China, industrial production, retail sales, as well as retail sales from the UK. So quite a few things going on this week as well. All right, so just taking a slightly closer look at inflation in the UK, we can see that on the chart on the left is headline CPI on an annualized basis, and the chart on the right is the core CPI on an annualized basis. We can see headline CPI has moderated down to about 2.2% over the last couple of months, right? But we've seen the core CPI accelerate from 3.3% in July up to 3.6%. Now, this acceleration in the core reading is something similar to what we saw in the US as well. Last week, we had CPI data and PPI data out of the US, which showed the core readings accelerating slightly as well. So we can see here, although inflation has moderated significantly lower over the last 8 to 10 months, it seems to be stabilizing. And in fact, for some countries as well, we are seeing the core readings start to re-accelerate as well, which could pose a little bit of concern for central banks in the next coming months. Now, looking at the forecast for September, headline CPI currently stands at 2.2% year over year in August. This is now expected to moderate lower, down to 1.9%. Remember, we don't have the estimate for core CPI, but if we do see core CPI sort of remain steady, hold steady, or even edge a little bit lower, along with headline CPI falling to 1.9%, right? Such a result could potentially function as a strong bearish catalyst for the pound, right? So take note, should we see another month of softer inflation data for the UK, we could see the pound facing some serious headwinds, and we could see it drop a little bit lower tomorrow. Right, then looking at the this is on Wednesday. Sorry, UK inflation data is out on Wednesday, 16th of October at 6 a.m. GMT. Right. Then on Thursday, 17th of October, the ECB is going to drop its monetary policy statement at 12:15 p.m. GMT, where they're expected to cut or reduce the main refinancing rate by 25 basis points. The main refinancing rate currently sits at 3.65%. The deposit facility rate sits at 3.5%. Right. So remember, the ECB has three main rates, and for the main refinancing rate, as well as the others, they're expected to cut by another 25 basis points. So we can expect the main refinancing rate to drop to 3.4%. Right? Should the statement convey a very dovish outlook on future monetary policy action, as well as further dovish rhetoric by ECB President Christine Lagarde during her press conference, we can expect the euro to come under significant overhead pressures. Right? We can see, right, inflation in the euro area has moderated significantly lower. When you look at headline CPI, which is the chart on the left, and core CPI, which is the chart on the right, you can see both of which have moderated significantly lower. Headline CPI currently stands at 1.8% on an annualized basis, while the core sits at 2.7%. Right, so with inflation moderating lower and remaining at the current levels, right, combine that with PMI activity, which has fallen into contraction, right, the ECB is definitely going to cut rates at this meeting, right? It's just a question of whether they just make a 25 basis point cut, or would they move ahead with a larger cut of 50. But for now, right, with inflation remaining relatively low, and also with PMI activity falling into contraction, right, the ECB is definitely going to cut rates in a bit to kickstart its economy as well, right? So with PMI activity falling into contraction, right, it of course does not uh, paint a good outlook with regards to GDP growth, right? So we can definitely expect the ECB to cut rates on Thursday, and it's widely expected they will do so by 25 basis points. Right, and finally, retail sales are out for the US on Thursday as well. So retail sales over the last couple of months have been pretty steady. Right, July's number was revised higher, up to 1.1%, while August came in at a slight growth of 0.1%. So consumer spendings so far has remained relatively strong, and when you look at it on an annualized basis, it has remained relatively steady since February of this year. And of course, with Thanksgiving coming up, and all the Black Friday sales as well as Christmas shopping, I think we can expect consumer spending to remain relatively steady in the US over the next couple of months. So headline retail sales is expected to grow 0.3% in August. So should we see sales match this estimate or perhaps come in even a little bit higher, we can expect demand for the dollar to remain to grow stronger as well. So take note, stronger retail sales is quite likely going to create further tailwinds for the US dollar. All right, with that, now let's dive into the charts on TradingView and start the analysis on the dollar index. Right, we'll start on dollar index, look at the euro since we've got the ECB interest rate decision coming up. Looking at a couple of other major currency pairs, look at the commodities and indices as well. We'll look at Bitcoin too, and of course, should you have any other requests, should you have any requests for any other instruments, please do let me know in the chat box, right? Do drop your request early in the chat box so we have time to go through the analysis together. All right, hi Costas, right, great to see you. Request for gold, euro, and dollar franc, right? Okay, great. So of course we'll start with the dollar index, then we'll work our way down to the euro, dollar franc, and then we'll move on to gold. All right, great, awesome, good to see the requests come in. All right, okay, starting with the dollar index, right? We can see that since Monday, 30th of September, we've seen the dollar index rebound very strongly, right? We can see that previously it was trading beneath this descending trend line here, and also it was trading underneath this multi-swing high resistance at 101.78. So we can see it has broken above all of these levels, right? It first broke out of the descending trend line on 2nd of October, and after which on Thursday, 3rd of October, it broke above the multi-swing high resistance as well, right? We can see this strong rebound in the dollar index has been caused by stronger than expected labor market report, right? We've had the ADP report drop on Wednesday, 2nd of October, right? We also had the non-farm payrolls drop on Friday, 4th of October, both of which pointed to a nice rebound in employment change. Then last week, we also saw inflation data. We had CPI data on Thursday, 10th of October, and we had PPI data on Friday. So CPI and PPI, right? If you guys remember, the core readings for both of these data points came in a little bit hotter than expected, right? So all of which have combined to provide a strong fundamental catalyst for higher demand for the US dollar, right? Remember, so a combination of stronger labor market reports over the last couple of weeks and with last week's slightly hotter than expected core readings for CPI and PPI have created strong demand for the US dollar. So that, of course, is going to push the dollar index higher, right? So for now, even today, right, we saw the dollar index open at around 102.91, reaching as high as 103.10 today. So we can, of course, still see demand for the dollar remaining intact. So with that, let's try and identify some of the key support and resistance levels. Right, what was we can see here, this was previously a multi-swing low resistance here, multi-swing high resistance, right? Okay, wait, we don't just keep this on for now, but let's start with the support first. When I look across this level here, this is at around 102.52, right? This is a pretty strong overlap support level. Why do I say that, right? Because previously this level was functioning as resistance in the first couple of weeks of January, after which it functioned as a nice swing low support in middle of March, functioning as support as well on 5th of August, and then once more on the 14th of August. So this was a pretty strong overlap resistance level. Remember, this was resistance here, support here, and support here. So this was functioning as a overlap resistance until the dollar index broke underneath it on 19th of August. And after breaking above it, this level found support here again, consolidating for a couple of days before bouncing higher. So this level at 102.45 is indeed a very strong overlap level, or a very significant overlap level, which can be used in the identification of the first support for the dollar index. Right. Now we can also run a Fibonacci retracement on this up downtrend here, starting from this swing high, 28th of June, going down to this swing low here on the 27th of October. Right, if we pull up all the fibs, right, we can see that there is a pretty decent resistance here, right around the 50% Fibonacci retracement. Right, we can see as the dollar index dropped sharply on 5th of August, it retraced higher, coming up to about 103.50 before reversing to drop lower. So price, the dollar index has once again returned to this level here, which could pose to be a pretty decent resistance level. Right, when you look across it, right, this is a pretty decent, almost like an overlap resistance here, right? We can see previously the dollar index finding nice support here, on 21st of March. You can see here 21st of March was a Thursday. It actually gapped down lower, right? Wednesday, it closed at around 103.37. Then it gapped lower to about 103.12 before stabilizing and reversing swiftly to jump higher. So this was a pretty decent support level back at the end of March, after which it ran into resistance in the second week of August, so creating a nice overlap level here that aligns, that also has the presence of a 50% Fibonacci retracement. Right, so we can identify the first resistance at around 103.14. Right, and it's also a level where we can see it, the dollar index stalling last Thursday, 10th of October. You can see 10th of October, it rose as high as about 103.20 before pulling back quite strongly on Friday, and today as well. It rose up towards this level once more, but it seems to be sort of being restricted by this level. So this overlap level here, sorry, we're going to identify it as the pivot rather, not as the first resistance. So the pivot level at 103.24 is overlap resistance that's accompanied by the 50% Fibonacci retracement. So perhaps you can see, we can expect the dollar index to pull back a little bit, right? To reach here, it's quite a significant overlap resistance. It could potentially reach here or exactly to the pivot and then pull back a little bit before resuming the uptrend. So take note, it is trading close to an overlap resistance that's accompanied by the 50% Fibonacci retracement. So this is where the pivot has been identified. Now looking a little bit higher as well, right? I see another pretty decent overlap resistance at 104.68. Right, we can see previously the dollar index finding support around here on 12th of June, and then running into resistance on 29th and 30th of July here. So this creates a pretty decent overlap level that also has the presence of a 78.6% Fibonacci retracement. Right, okay. Although you can see the 61% is here as well, perhaps maybe this little swing low here. Actually, this is a pretty nice swing low that has taken place close to the 61.8% retracement. This is also, I would like to keep this level in mind as well, because this, what we see here in the market structure here, points to a very nice swing low support taking place at around 103.78 here, which is close to the 61.8% Fibonacci retracement. So perhaps we can identify this as another resistance, as a more, I would say, sorry, this should be the first resistance level for now. And of course, if dollar index continues to climb higher, we can then use the second resistance. We can then use this overlap resistance at 104.68. But for now, okay, let's just keep the resistance at 61.8%. We'll keep 50 and 61.8%. Right, so these are the key support and resistance levels for the dollar index. We can see it seems to have run into resistance already. So should it pull back towards the first support, which is an overlap level at 102.45, right? This may give us a better opportunity to go long on the dollar index. And at the same time, also, if you're looking to short the dollar index, right, take note the pivot is a strong overlap resistance. So identifying a suitable stop loss slightly above the pivot here would be a good area to do so, or perhaps as high as the first resistance, and then you can target the first support at 102.45 as a potential take profit target for any short dollar index trades that you may have. Right, now let's look at it on the 4-hour time frame. And you can see here a bit more clearly, right, it has stalled around this level at 103.15 since last Thursday, 10th of October. It looks to be running to resistance once more. So should we see the dollar index reverse of the pivot, it helps us identify a potential bearish reversal opportunity. And then we can then target the first support at 102.45 as a potential take profit target for any short trades that we may have for the dollar index here. Now, if dollar index has risen strongly since the end of October, since the end of September, early October, then of course the euro has moved in the opposite direction, right? We can see it dropping through many significant support levels, right? There was a nice swing low support level here that occurred on 11th of September at 1.1002. And there's also another nice overlap level here. If we can stretch it all the way here, right? Another nice overlap level here that was broken last Thursday as well, and that's at 1.0946. You can see it breaking through several levels, and also we can see it has stabilized here today, right? Maybe you can identify this here today as the pivot level at 1.0910. And we have seen, looks like the euro has reacted off the pivot level here to stabilize and climb a little bit higher, right? Especially with dollar index pulling back today as well. Now, this was maybe this can be like a more of a upside confirmation level here, right? And the first major resistance for the euro would be at this swing low at 1.1006. Right, so right now we can see the euro stabilizing today, right? It has bounced off the pivot on Thursday, 10th of October, right? And it looks to have stabilized above this level once more. So it looks like the euro has bounced off this pivot here and looks to be climbing higher. However, take note, it needs to break above this upside confirmation level at 1.0942. So if that happens, then we are quite likely to see this currency pair move higher towards this pullback resistance at 1.1060. 1.1060 is a pullback resistance now. Previously, it functioned as a swing low support on 11th of September. After breaking underneath this level on the 4th of October, this is now a pullback resistance level. Now, we can also run a Fibonacci retracement on this downtrend, starting from this swing high on the 25th of September, going down to this low of 10th of October. Let's look at all the fibs. We can see that the 38.2% retracement sits quite close to the first resistance. So let's just keep that level here. And what about support? At least on the daily time frame, right? The next major support for the euro is at this swing low here. Sorry, this swing low here taking place on 2nd of August. We see a very nice V-shaped bounce here, right? Very nice swing low taking place. So this is where the next major support for the dollar, the euro would sit. Okay, so we have seen the euro stabilize. It looks to be climbing high, but remember, it's still trading in a strong downtrend, right? But if it breaks above the upside confirmation at 1.0942, then perhaps there's an opportunity for bullish breakout. And if that bullish breakout takes place, we can then target the 38.2%, or the first resistance rather. We can target the first resistance at 1.1006 as a potential take profit target for the euro, for any long position for the euro. Right, okay, so these are the key levels here. Let's take a look at it on the 4-hour time frame. If there's a need to fine tune the analysis, we can see, right, this pivot level here is pretty significant, right? Pretty strong pivot level here. Let's see. Right, so if we do see the euro break above the upside confirmation level, then we can probably expect it to come close towards the first resistance. So we may have a potential bullish breakout through this upside confirmation level here. And in terms of support, if anything, on the slightly, if I were to try and identify a slightly another level that's a little bit closer, maybe for the 4-hour time frame, right? I think it's a pretty decent level here, which is at 1.0875 that we can identify as well. We can see the euro bouncing on this level here on 16th of July and stabilizing on this level here at 19th of July till the 22nd as well. Then over here you can see it sort of runs into resistance, creating a pretty decent overlap level, right? So we can probably identify 1.0875 as the first support on the 4-hour time frame as well. But for now, it looks like the euro has stabilized and we may see a nice potential uh, breakout to the upside. However, if it doesn't, if it stalls around the upside confirmation level, right? If it stalls around the upside confirmation level here, then of course then we are likely to see the downtrend extend even further, because we see the euro continuing to trade right beneath the bearish Ichimoku cloud. Right, you continue to see it trade underneath the bearish Ichimoku cloud, right, highlighting the ongoing bearish momentum here. Right, so these are the key levels for the euro. All right, we've Costas, you also want to take a look at dollar franc, right? Let's take a dollar franc, then we'll move on over to gold. Right, so with dollar franc, it has dropped down as low as 84 cents over here, right? And sorry, 84 francs, 0.84 francs here. And we can see that demand for the franc had increased very significantly since 2nd of May, right? Since 2nd of May here, we've seen demand for the franc increase, so that causes dollar franc, of course, to drop lower. But since then, right, since beginning of October, we've seen demand for the US dollar pick up, right? We've seen strong demand for the dollar pick up, which has caused, of course, dollar franc to stabilize at around 0.84 and rise higher, and also break out of a multi-swing high resistance. This was like a strong multi-swing high resistance that was in place previously. Right, we can see dollar franc running the resistance at 85.16 on 2nd of September, 12th of September, 23rd of September, and 26th as well. So this was a pretty for almost 4 weeks, this level at 85.16 served as a strong multi-swing high resistance, which finally got broken convincingly on 4th of October here. And since then, it has managed to stay above this level. So what was previously a strong multi-swing high resistance can function now as a potential support area here. So we have a nice pullback support at 85.16, which we can identify as the first support. Now dollar franc is continuing to rise higher, right? We can probably run a Fibonacci retracement from this swing high on the 1st of May down to this swing low here on the 6th of September. Let's take a look at all the fibs. We can see here close to where the 38.2% Fibonacci retracement sits. There's a nice swing high taking place here. We can identify this level, this swing high resistance, as the pivot, which is accompanied by a Fibonacci retracement at 38.2%. Right, and or maybe I could see there's probably more of a, actually this level here at 87.24, the swing high resistance, sorry, on 15th of August, I'm going to identify this as the first resistance, and the pivot, I would identify it here. So we could see the euro probably stall around this level here, because you can see here on 9th of August, till the 14th of August, the euro stabilized around this level here before bouncing higher. Then after it broke underneath this level, you can see on 4th of October and 10th of October, right, it came pretty close to this level once more before pulling back slightly. So that does seem to be a little bit of resistance at around 86.28. So we can identify this as a pivot level here. So once again, dollar franc could potentially stall around this level and stall around this level and make a slight pullback here. Make a slight pullback towards the first support. And we can just keep 38.2%. Right. So these are the key levels for the euro dollar franc on the daily time frame here, right? It's sort of consolidating above the first support since 4th of October. It has failed to break above 86.28. For now, this looks like to be a pretty decent pullback resistance, almost going to be like an overlap resistance here. And yes, so we can perhaps see dollar franc rise up towards this level, hit the pivot exactly, and potentially stall around this level to drop lower. Now let's look at it on the 4-hour time frame. A little bit more clearer here, right? So you can see since breaking above 85.16 very strongly on 4th of October, dollar franc has sort of just ranged sideways, right? It's been trading approximately between 85.40 on the lower side and about 86.10 on the upper side as well, right? So it does seem to be in a consolidation period, right? Consolidation period here. There's no real strong bullish momentum as what we saw from 30th of September. It's just sort of trading sideways since 5th or since 7th October. So most of last week, dollar franc has been just trading sideways with resistance looking to be at this pivot here at 86.29. All right, so these are the key levels here for dollar franc on 4-hour time frame. And now let's move on over to gold. Right, XAU USD is the instrument that tracks spot gold futures. Right, and we can see this instrument has made a new intraday all-time high on Thursday, 26th of September, and that's at $2,685.57 per ounce. We also see it make a nice swing low here on 9th of October, right? Nice swing low support here taking place last week. So this is where I would identify my first support for spot gold prices, and where the all-time highs sits at. That's where I would probably identify the pivot as well. Pivot is at 2,672, close to the intraday all-time high, and perhaps this is where we can expect gold prices to probably stabilize and make a small pullback once more, right? Now, if this is the intraday all-time high for spot gold prices, how could we possibly identify the next resistance level, right? In such a scenario, we can rely on Fibonacci tools such as Fibonacci projections and extensions, right? To find an extension level, we're going to run a retracement from here. This intraday high on 26th of September going down to the low, which is the lowest point, 04, 0482. Right, this is the lowest point here. Key extension levels sit at 127, 161%. So you can see 127% is at 2,700. So potentially this is where the next major resistance for gold is going to come in at. That's at around 2007, 07.62. Right, and of course, should gold prices continue to climb higher, we can then of course use the 161% extension level as to identify the next potential resistance barrier. Right, okay, let's see. I think we can also try and run a projection. Right, I believe we can run a projection from here, this low on 4th of September, going up to this high here, 26.2 and ending at 0.3. Right, key projection levels sit at 61.8%, 78.6% and 100%. We can see that the 61.8% projection level aligns very well with the extension at 161%. So this gives us a Fibonacci confluence. So that means this is probably going to be a very strong resistance barrier in the future. So just keep that in mind, right? 78.6 and 100% levels which are simply too high for now, or which is simply too far away from where price is currently trading. So we don't need these levels for now, but something to keep in mind for the future should we see gold prices climb higher. But for now, the first major resistance is around the pivot, which is at 2,672, close to the intraday all-time high. The next major resistance is identified by the Fibonacci extension at 127%. And of course, if gold prices continue to climb even further or climb even higher, right, we can then use this Fibonacci confluence to identify the next major resistance barrier. Right, but for now, right, gold seems to be pulling back again, running the resistance. You can see here it has failed to break above the pivot since 1st of October, right? It bounced off this level on 1st of October, 4th of October, and even today as well. You can sort of argue it came pretty close to the pivot once more before pulling back again, right? And I think you can also probably run a Fibonacci retracement from this low here, 7th of June to the intraday all-time high. Let's pull up all the fibs. All right, you can see the 23.6% retracement sitting pretty close to the first support, so let's keep that on, right? And of course, price continues to trade above the bullish Ichimoku cloud, right? The cloud is green in color, highlighting the bullish momentum, and price continues to trade above the cloud as well. And maybe there is a, okay, not over here, but I think there's a case for a pretty decent this ascending trend line at this point here, starting from here, starting from 8th of August, right? We see a nice ascending trend line for spot gold prices as well. We can see since 3rd of September bouncing on this trend line several times and then bouncing off this level once more on 10th of October as well. Okay, now let's look at it on the 4-hour time frame. Right, you can see the previous 4-hour candle coming quite close to the pivot once more before getting rejected. Right, you can see this level here at 2,672 is indeed a pretty strong resistance barrier. Right, so what this also tells us is if you've been long gold, right, if you've been long on gold since the swing low here on 10th of October, or perhaps from the gap down that occurred this morning, right? Remember, there's a gap that occurred earlier this morning, right? Take note, this is a strong pivot, is a strong resistance area, so identifying your take profit level close to this pivot here would be a good suitable area to do so, right? Would be a suitable area to identify a nice potential price target for any long gold trades that you may have. But take note, might be a bit too late now, right? We see the current 4-hour candle turning white as well. Remember, white here is a red candle, it's a down candle, so it looks like to have rejected off this level once more after closing the gap, and it's probably going to drop a little bit lower. Right, because on the 4-hour time frame, I also see a nice uptrend here. You can run a Fibonacci retracement from this low. This is the lowest point, 10th of October, going up to the high of today. Let's pull up all the fibs. We can see that when it's gap down here, it found support close to the 38.2% Fibonacci retracement. Right, so we can probably use this level. Actually, use the 50 because it looks more of a nice overlap here. Or pullback support, right? Pretty good pullback support around here, intermediate support level that we can identify. We can see the gold prices bouncing off 2,638 several times here, 3rd of October all the way till 8th of October before finally breaking lower. Then it found support once more on Friday, 11th of October, and this level here also has the presence of a 50% Fibonacci retracement, so probably pretty decent intermediate support level to identify. All right, so these are the key levels for XAU USD. So should we see gold prices rise up towards the pivot once more, right? This would be a suitable area to identify as your first potential price target for any long trades that you may have. Remember, it's a strong resistance barrier that's been in place since I would say even since 27th of September, right? You can see since 27th of September, for almost now 2 to 3 weeks, a period of 2 to 3 weeks, gold prices has failed to break above this level for now. Right, okay, so we've covered the dollar index, a few of the major currency pairs, we've covered gold. Let's take a look at XTI USD. We'll cover one more commodity. Then we'll move on over to the indices. All right, looking at crude oil, XTI USD is an instrument that tracks crude oil futures or WTI crude oil futures. And we can see here after gapping lower, right, we can see last Friday, crude prices closed at $75.73 per barrel. It gapped lower today to open at $75.15 and has continued to fall strongly as well. It's pretty much been in free fall today, right? If you look at it on the daily candle, it's been in pretty much in free fall. So where could be the next support level, right? When I look across here at $72.73, this is a nice overlap support. Why do I say that? It's a nice swing low taking place here on 4th of June. another swing low support taking place on 5th of August, and the third swing low support taking place on 22nd of August. You can see here previously this level functioned as a strong multi-swing low support before finally breaking out of this level on 3rd of September, but it proceeded to function as resistance on 23rd and 24th of September. So what was previously a strong multi-swing low support has now functioned as resistance, thus creating a very nice overlap level, which WTI oil or XTI USD has bounced off once more on 9th of October, right? So this creates a very nice overlap support level, which we can use in the identification of the pivot. So take note, pivot has been identified at $72.73. This is an overlap support level that's also accompanied by Fibonacci retracement, right? We can run a Fibonacci retracement from this low, 1st of October, going up to this high here, 8th of October. We can see that the 50% retracement aligns very well with the overlap here. Now, in terms of resistance, right, we can see the more immediate resistance level is at around $76 here. We can see XTI USD stalling around this level last Thursday and Friday. Right, so quite clearly this would be the first resistance here. And in terms of support beyond this pivot level here, right, I don't see any other major support apart from this swing low that has taken place on 26th and 27th of September, right? Nice swing low support taking place here at $68.24. So that's where the first support has been identified. So if you have been shorting crude oil today, right, if it gapped lower after gapping lower and continuing to fall lower, if you have shorted crude oil today, right, identifying a potential take profit target close to this pivot level here at $72.73 would be a suitable area to do so, right? So take note, we could potentially see price XTI USD stabilize around the pivot and probably make a small rebound. But for now, right, overhead pressures for XTI USD are strong and is falling towards a significant overlap support level, which is the pivot, and it's also accompanied by a 50% Fibonacci retracement. So take note, this could be a level where XTI USD once again can find a nice floor. So this would be a good take profit target for any short trades that you may have for XTI USD. Right now, let's look at it on the 4-hour time frame. Right, you can see the gap much more clearly here, right? Gapping significantly lower and stabilizing around midday Asia time before finally dropping lower again. So the downtrend looks to be extending lower, right? So I say this 50% retracement level has an overlap support as well, which is the pivot. So identifying a take profit target at around this zone would be a suitable area to do so. All right, okay, let's see if there's anything else that I would identify. Let's see where the 60% retracement sits. Maybe it'll be good to see where the 61.8% retracement sits. It's around here. What about 78.6? All right, okay. So maybe there's a nice little sort of like swing low taking place here, or pullback taking place here as well. 2nd October, close to the 61.8%. So this could be another pretty decent support area as well. So take note, crude prices are falling. First take profit target for any short trades should be close to the pivot level or close to the 50% retracement, right? And if we do see crude prices continuing to fall even lower, right, if it does break through a pivot and continue to fall lower, then identifying the next take profit target at around the 61.8% retracement level would be a suitable area to do so. But for now, right, this is a very strong overlap level. I think even if crude oil drops down to the 50% retracement, I think this is where it is quite likely going to stabilize before staging a minor rebound. Okay, so we've covered a few of the currency pairs, commodities. Let's take a look at the indices, starting with DE40. Right, DE40 is the instrument that tracks the DAX futures. Then we'll cover US 500. Then we'll take a look at Bitcoin as well. Okay, so looking at DE40, right, this is the instrument that tracks the DAX futures. You can see it has made it has made an intraday high on Friday, 27th of September. Did it reach this level this week? Or rather today, this is at 19,487. No, not yet. It came very close. It came very close to breaching the intraday all-time high that was formed on 27th of September. Right, this was earlier today, but it has failed once more at this level here. So let's start on daily first. Right, so DAX came very close to the intraday high today, but looks to have failed around this level. right? So this is where the pivot can be identified at the all-time high, right? Pivot can be identified at the intraday all-time high, which is where it has seemed to have run into resistance once more. Could make a small pullback here down towards the first support. Right, first support is, I would say, is a nice overlap level. Right, we can see here this level at 18,971 previously functioned as a nice swing high resistance here on 30th of August, resistance once more on 19th of September and 24th of September, after which proceeded to function as support not once but twice on 3rd of October and then again on 8th of October. So this creates a very nice overlap level, right? So it's an overlap support at 18,971, which can be used in identification of the first support. So first support at 18,971 is an overlap support. We can probably run a Fibonacci retracement as well on this uptrend here from 10th of September to the intraday all-time high. I think there should be a 38% that we can use. Let's keep 38 and 61. Right, we can see 38% retracement aligning very well with the overlap support, and 61 is just over here at 18,695. Now, what about resistance, right? If DAX is trading close to its intraday all-time high, how could we identify the next major resistance? We can try a Fibonacci projection to identify it. So let's start from here, 0.1, 10th of September, going up to 0.2, 27th of September, and ending at 0.3. That's at 8th of October. So key projections sit at 61, 78, and 100%. We can also run a Fibonacci retracement on this downtrend here from 27th of September down to 8th of October. There's the key extension levels sit at 127 and 161%. And we can see that 127% extension sits quite close to the 61.8% projection. This gives us the first Fibonacci confluence. And we can see the 161 extension sitting quite close to the 78.6% projection, giving us a second Fibonacci confluence. So these confluence zones can then be used to identify the first and second resistance areas here. Right, so first resistance is simply going to be at the first Fibonacci confluence. That's at around 19,717. And the next resistance beyond that is going to be at the second Fibonacci confluence. That's around 19,935 here. Right, so for now, DAX looks to have stalled around the pivot once more and probably going to pull back a little bit lower. Right, how low? Let's see. Let's look at it on the 4-hour time frame and see if we can identify any other intermediate support levels. Right, on this uptrend here, we can also run a Fibonacci retracement from 8th of October going up to the high of today. Let's look at all the Fibonacci retracements, right? Around the 50%, I see a pretty decent overlap level as well, right? 50% Fibonacci retracement, I see a nice overlap. Right, we can probably identify this as a intermediate support as well. And we can see DAX running the resistance here on 3rd of October, 7th of October, after which it proceeded to function as support on 10th of October, creating a nice support here. So if we do see DAX pull back once more, this is where it could potentially stabilize around the 50% retracement. There's also another pullback, intermediate pullback, I should say, a little bit higher as well, right? There's another one here at around 19,300. This is where we might have, okay, there's no Fibonacci retracement there. That's fine. Let's remove it. But 19,309 looks to be another pretty decent intermediate overlap support level as well. Right, take note, these are the key levels for the DAX on the daily and 4-hour time frame. Looks like on the current 4-hour candle, DAX looks to be making another attempt towards the intraday all-time high. Right, so take note, so if you've been long on the DAX since this morning, right, identifying your first take profit target at around the pivot would be a suitable area to do so. All right, okay, let's move on down to US 500. And of course, if there's any other requests, please do drop them in the chat box now, right? As we come towards the end, almost coming towards to the end of today's session, do drop your requests in the chat box as soon as possible, right? If there's any. Right, let's look at US 500. Looks like equity markets are racing higher today, right? US 500 is the instrument that tracks the S&P 500 futures. Right, so after making an intraday all-time high last Friday at 5,824, it looks to be breaking above this level as we speak. Right, it looks to be breaking above this level as we speak. So we can identify this as of now probably. Okay, wait. So this is just the intraday all-time high. First support. Let's try and identify the first support right here. We can see US 500 running the resistance at 5,765 at the end of September, right? And after which it functioned as support on 10th and 11th of October, creating a pretty decent overlap level, which we can identify as the first support here. Now, with price making a new intraday high, right? We're definitely going to get a new intraday high on Monday, 14th of October. How could we identify the next resistance barriers? Once again, we can rely on Fibonacci projections and Fibonacci extensions. So let's start with a projection first, starting from here, 0.1, 6th of September, going up to 0.2, 26th of September, and ending at 0.3, which is on 2nd October. You can see 61.8% sitting at around 5,900. Now we can also run a Fibonacci we can find a Fibonacci extensions by running a retracement here. Let's try and see if there's any extensions that we can use. Right, we can see the intraday all-time high was was accompanied by Fibonacci extension at 161%, but this level looks to be breaking out today. But let's just keep 161 extension for now, because that's where the intraday all-time high last Friday stalled and pull back a little bit. But for now, we're seeing a nice bullish break above the Fibonacci extension at 167%. We can probably run one more, try and find one more retracement, or sorry, one more extension. Right, there's another 161.8 over here. But if let me see, is there any 127? No, this part maybe more inclined to use it like this. Because you can see the trend line captures the market structure pretty well over here. Whereas if I started from here, there's a lot of deviation here. The trend line of the retracement tool doesn't capture the market structure that well. So I'm more inclined to use it from this starting point here, 1st of August, going down to 5th of August. Right, so we can see here, US 500 is breaking above its intraday all-time high that was set last Friday, which was accompanied by a Fibonacci extension at 161%. So if you've gone long on US 500 or looking to go long, right, we can identify a potential price target or take profit target at around 5,860. This is where the first resistance has been identified. This level has been identified by the Fibonacci extension at 161%. Now, of course, if prices continue to climb even higher, we can then use the Fibonacci projection at 61.8% as the next profit target. Right, so this resistance level at 5,912 has been identified by the Fibonacci projection at 61.8%. So should we see US 500 continue to climb higher, right? First resistance can be used to identify your first potential take profit target. That's identified by the Fibonacci extension at 161%. And of course, should this index continue to climb higher, we can then identify the next potential price target. That's by that 61.8% Fibonacci projection, right? So these are the key levels for the US 500. Let's see, I think we can probably, let me see, probably we can, yes, we probably have a nice, pretty decent ascending trend line as well over here, right? Probably not too bad ascending trend line. We can see it is bounced off this trend line 3 times, 6th of September, 9th of September, and then on 11th of September as well, and coming quite close on 8th of October. So pretty decent ascending trend line here. Strong bullish momentum. US 500 continuing to trade above the bullish Ichimoku cloud as well. Now let's look at it on the 4-hour time frame. Right, yep. So far for now, we see a nice clean break above the previous intraday all-time high. So it does look like equity markets, US 500, but specifically looks to be rising strongly up towards the first resistance, which can be used as a potential take profit target. So right, I don't see any need to change or fine-tune the analysis for on the 4-hour time frame. I think this is pretty good, right? So we can see strong bullish uptrend here, strong bullish momentum. Right, another nice ascending trend line on the 4-hour time frame here. All right, so these are the key levels for US 500. Okay, before we continue, I'm going to launch a poll as well. Right, truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue the or wrap up the session with the Bitcoin analysis as well. All right, for those of you uh, who are watching, I truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll wrap up the session by looking at Bitcoin. Right, we'll start on a daily time frame, and we've seen, wow, strong bids for crypto today. Let's see if Ethereum is moving higher as well. Right, okay, Ethereum is also in the green today, but not as strong as Bitcoin. Really see Bitcoin rising up strongly towards this swing high resistance here that's formed on 28th of September. So this is a nice swing high resistance here. Then we can identify as the pivot for today. Right, this is a nice pivot level here at 65,851, which you can use as a potential take profit target here. Right, you can see Bitcoin is rising strongly, right, trading at around 64,922, rising strongly towards the swing high resistance that was formed at the end of September. So this is what is a swing high resistance can be used in the identification of a potential take profit target for any long trades here. Now, beyond that, there's a nice multi-swing high resistance taking place at 68,173. Right, we can see here the first swing taking place here on 22nd of July. Then the second swing taking place at around 29th of August before dropping lower. So almost like a nice double top here before Bitcoin reversed strongly. Right, so that's why we've identified the first resistance. The pivot is also a multi-swing high resistance. Take note, we could see Bitcoin probably stall around this level once more. Right, so this is where you should identify your first potential take profit target. And of course, if it continues to climb even higher, we can then identify the next take profit target at around 68,170, which is a multi-swing high resistance. All right, thanks everyone for those of you who have voted on the poll as well. Truly appreciate it. All right, now let's look at support. Right, I think, okay, there's a nice multi-swing low support taking place here on 2nd of October, 10th of October. Right, this is where we can identify the first support for Bitcoin at 60,117. On this uptrend here, we can also run a Fibonacci retracement from 6th of September to the 27th of September. Let's take a look at all the fibs. We can see that 50% sits pretty close to the first support, so let's keep that on. Multi-swing high resistance here. That's a nice downtrend. We can run a retracement from here as well, 29th of July down to 5th of August. Let's look at all the fibs. Right, we can already see that 78.6% has been surpassed. That's fine. Let's not keep it on anymore. We don't need that. Now let's look at it on the 4-hour time frame. Right, on the 4-hour time frame, you can see there was also another swing high resistance at around 63,600. You can see this level functioning as resistance on 8th of October, then running the resistance here as well on the 12th of October, right? Pretty decent resistance barrier, which finally got taken out. So on the 4-hour time frame, right, I would use this level as the first support for Bitcoin on the 4-hour time frame. You see here, very nice pullback support level. And for the second support, right, we can use this level here as well. This is a nice little pullback level here taking place, a nice little swing here at around 62,190. So this is where I would identify the second support. Right, so it's nice bullish breakout taking place today, right? Nice bullish breakout taking place this morning through this swing high resistance here. And it looks like Bitcoin is trying to make a run towards another swing high resistance that's at 66,136, which has been identified as the pivot. So take note, this is a good area to identify as a potential take profit target, because we may see Bitcoin probably stall around this level here and pull back a little bit. So take note, pivot level is a swing high resistance that can be used in identification of a take profit target for Bitcoin. All right, let's just do hi Arun. Okay, we've just got time for Ethereum, so let's just cover Ethereum. All right, so similar story for Ethereum is rising up, maybe coming close to this swing high resistance here. Right, there's a nice swing high resistance taking place here at the end of September at 2,701. This can be identified as the pivot for today. So once again, Bitcoin rising strongly towards this level. Oh, actually, there's another level I would probably identify. Wait, let me just see. At around the 61.8%. Sorry. Okay. I'll identify the pivot at around the 61.8% Fibonacci retracement because I see a nice pullback resistance level here. Right, when I look at 2,560, this level previously functioned as support on 21st of September till the 30th of September. Nice little support level here before finally breaking lower. So this could now function as a potential pullback resistance level. So, and it's also accompanied by a Fibonacci retracement at 61.8%. Right, so take note of that. So Ethereum is rising up close towards this pivot level here. It's a pretty decent resistance level. So take note, we can identify your first potential take profit target for Ethereum at around the 61.8% Fibonacci retracement. And of course, if it continues to climb higher, then you can target the first resistance at 2,701, which is the swing high resistance here. So perhaps maybe if Bitcoin is rising is rising very strongly, and also if that pulls up Ethereum as well, maybe there's an opportunity for a bullish breakout for crypto this week or for today or tomorrow, right? Either the next couple of days, maybe a strong bullish breakout for Ethereum, right? Especially if Bitcoin continues to climb higher, right? It might drag the other coins up with it as well. So we may see a potential bullish breakout for Ethereum through this pivot level that's accompanied by the 61.8% Fibonacci retracement. In terms of support, it's a nice multi-swing low support for Ethereum at 2,347. See the first swing low support taking place here on 3rd of October. And another swing low support taking place here on the 10th as well. Alright, so let's see. Yep, I think this is pretty much it. For Ethereum, let's go look at it on the 4-hour time frame. Right, this is a little bit more clearer. Right, there's a pretty decent pullback resistance level here at 2,560, which has been identified a pivot. If we do see Bitcoin continuing to climb higher, it looks like it is running out of steam a little bit. Ethereum as well, probably running out of steam here as well. Right, maybe we won't see that bullish breakout take place today. Maybe we're going to see a little pullback. Right, so if you've been long on Ethereum since this morning, right, identifying your take profit target close to this pivot level is a pretty good area to do so, because it's also accompanied by the 61.8% Fibonacci retracement. Now, for the 4-hour time frame, this multi-swing low support would be, I would classify this as the second support here, and I see another more closer level here. There's a nice pullback level here, 2,491, which we can identify as the first support. We can see here that 2,493 previously functioned as a nice swing high resistance on 7th of October, functioning as resistance again on 13th of October, right? We can see Ethereum stalling underneath this level last week before finally breaking higher today. So what was previously a strong resistance barrier can now potentially function as a nice pullback support. Right, so these are the key levels for Ethereum on the 4-hour time frame. Right, I don't think we will see that bullish breakout take place today. Perhaps it's more likely to stall at around the 61.8% Fibonacci retracement and reverse the drop lower. Bitcoin also looks to be stalling at around here as well, at around 65,000 as well. Looks to be stalling, but let's see. It does look like to be on a daily candle. This this up candle looks to be much stronger, of course, than the Ethereum's candle as well, right? And I think in terms of percentage as well, I think the move in Bitcoin has been much stronger as a percentage level as well. All right. All right. Hi Arun. Sorry. Okay, I can't launch the poll again. Sorry. Next time if you can just well, yeah. Usually I will launch the poll about 10 to 15 minutes before the webinar ends, but it's all right. Do watch out for the next upcoming webinar brought to you by IC Markets, and do remember to vote in the next session as well. All right. Thanks everyone for tuning in to today's webinar. Right. Take note, these are the key levels for the dollar index here. Right. It's approaching a pretty strong resistance level that's accompanied by the 50% Fibonacci retracement. And also at the same time, take note, it's quite a pretty heavy calendar as well. Right? It's quite a pretty heavy calendar with quite a few things to look out for. But I would also say I'd just like to highlight UK's inflation data out on Wednesday, 16th of October. And then we've got the ECB monetary policy statement as well as President Christine Lagarde's press conference on Thursday, 17th of October. And after which we have US retail sales as well. All right. All right. Thanks everyone for tuning in to today's webinar brought to you by IC Markets. Do look out for all upcoming webinars for the rest of this week, and I'll look to catch you at the next session. All right. Thanks everyone. Take care and have a great trading week.